Okay, you guys, this is Cuatro X Class 1, Introduction to Level Counting. Level counting is the foundation of everything we do. Level counting is the foundation of trendline structure and Elliott wave. Mostly all of the different methods that you're going to see use level counting. They just don't know that they do. This is pretty much the market maker's method, and this is what we're going to start with because this is going to make you guys really strong when it comes to trendline structure. The four things that we're going to do today is the 3 levels of trend. I'm going to explain that to you. Trading reversals, because in the beginning, that's all you should be trading is reversals. We're going to do lab with the students. That means we're going to do charts together. And at the end, we're just going to open it up and everybody just asks questions and I'll answer them as best as possible. All right. The 3 levels of trend. There are 3 levels of every trend. Some are as plain as day. Some are not able to be seen. Today, we will concentrate on those that are able to be seen. With experience, you'll be able to identify the levels more easily. Trend is the direction of something. So that's what we actually look for. We look for the trend to actually trade the trend and try to make trend line structures. In this example right here, this is a downward trend, okay? And level counting is the different levels that a trend actually holds. I don't know if you guys remember, I told you that we work off 5 bounces of every trend. Well, I'm going to show you what the 5 bounces are. This is an upward trend, and it ends here. After this upward trend, it starts coming downwards, right? So this is the downward trend. This is the level 3 of this upward trend, okay? After that, from level 3, it goes to level 1. So this was a sell, level 1. And what it usually does, it consolidates. So it consolidates sideways, okay? After that level 1, it'll drop another level, level 2. And then it'll consolidate sideways. And then it'll come back to level 3. And then it starts all over again. Every trend has the 3 levels. Some are very easy to see, like this one. This is why I gave it to you guys. But some are really hard to see. But as like the slide before said, as the more experience you do, the more charts that you work on, the more markups that you work on, you'll be able to see them. But this is how it is. And every trend, it doesn't matter what it is. If you find a trend, you're going to see the 3 levels. That's what you're looking for. So this is what we do. We sell from here to here. And then we wait, and then we sell. And then we wait, and then we sell. Or if you catch a level 3, you sell all the way down. You catch a level 3 at the bottom, you buy all the way up, okay? But this is what we look for. Now, this is the same chart, but we did the upward trend to show you what the level 3s are. So this was the end of this trend right here, which looks like it was like a sideways trend. And this was the level 3 of that trend. Because remember, it always begins and ends with level 3s. Okay, that's the reversal level. That's what we buy and sell. It went to level 1 and consolidated sideways. It went to level 2. It did a small consolidation, but you can see it. Look at this long candle. That's the raise to the level. And then it went to level 3 and then back down. This is every day, every minute, every time frame, every trend. It happens every day. It's not like we missed this one, we'll never see it again. We're gonna see it again. What you wanna train yourself is to see these levels. And this is how you're gonna make money, okay? Now, this is a trendline structure Elliott wave, okay? This is a sideways. I picked this one because it's really difficult to actually count the consolidation, but I wanted to show you guys this. This is trendline structure. That's what I got here and here. And what all it is creating a trend. So you're seeing the up and ups and the downs and downs. So there's a trendline structure, which this was E, this was 0. This was the end of this trend right here. You see this yellow level 3? That was the end of this trend. So it started a new trend going down. But this whole thing here is a trend. That's what I'm counting on, okay? So if this is level 3, this becomes level 1, consolidation, level 2, consolidation, level 3. and then it'll start a brand new trend. If you guys remember, E always starts a brand new trend, the fifth one. In between these levels are trends. There's trends inside of trends depending on the time frame. So if this is a daily time frame, because I'm a swing trader, inside of here we have the 4 hour, the 3 hour, the 2 hour, the 1 hour, the 45 minutes, the 15 minutes. So there's going to be those trends, those level 3 trends inside of these trends. So here we go. This is a whole trend right here, right? This is the 5 bounces. You got 1, 2, 3, 4, 5. In here, you have 5 bounces. From level 3 to level 1, you have 5 bounces as well. You have this one right here. 1, consolidation. 2, 3, consolidation. 4, 5. They're everywhere. And I know it sounds crazy, you guys, and I know you're like, man, that's crazy. But as much that you do markups, the more that you do markups, the more you're going to see them. You're going to understand what I'm saying. So this one is an uptrend, right? From level 1 to the consolidation. Here's the 0, because this is actually a level 3 now. Let me go to the next slide. Okay, so this is the same markup, but the levels inside of the levels. So this is a level 3, okay? This becomes level 1, consolidation. That's 2 bounces, 1 and 2. 1, 2. Level 2, consolidation. 3, 4. Level 3. You guys see it? We're looking at the green now. Okay, so it becomes level 3 again, right? Because this is the bottom. This is a reversal. That means it's going to go uptrend again, right? So we have level 3. Then we got level 1, consolidation, 1 and 2. Level 2, that's 3, consolidation, 4, 5. Level 3 again. Now this one from B to C is going to do the same exact thing. It's going to do a level 1, a consolidation, a level 2, a consolidation, and it's a level 3. And again over here, the same thing. They might not be as visual as these. You might not be able to see them with the plain eye, but they're there. They're there. You just got to try to find them, and that's what we try to accomplish. What you want to do is you want to try to find these levels. As long as you can find these levels, you can do trend line structures. Okay, so let's check this out. This level 3, and it stops right here at the bottom of this wick. We call that the wick. Candles leave wicks, right? That wick right there, that little point right there, say here is the consolidation, right? And that is from here to here, just in a bigger time frame. So this right here is the equivalent of this. Because inside of here, believe it or not, inside of here, there's about 4 more trends. The same thing inside of here, like 4 more trends. If you drop the time frames, it'll get bigger and bigger and bigger, more candles, and more candles, because the candles represent that time frame. So these are daily time frames. So imagine if I break this down to 4 hour, imagine how many candles I have in between here and here. And those will be different. Those will be trends inside of trends. So remember, there is trends inside of trends. There are level 3s inside of level 3s, inside of level 3s, inside of level 3s. Now, depending on how you want to trade and what time frame you want to trade, if you want to do intraday, which is a lower time frame, or you want to do a higher time frame, this is what you got to look for. You got to look for the 3 levels. 3 levels is what we look for. And this is the only way that you'll be a strong trend line structure guy. You'll be able to find trend line structures when you're able to find the levels. So we have a level 3, level 1, level 2, level 3. Level 3, level 1, level 2, level 3. And here is a level 3 again. This is a reversal. This is what we trade. Right now in the beginning, this is all you should be trading is reversals. And then there's going to be a level 1, a level 2, and a level 3. And then when it goes up back up to D, there's going to be a level 1, a level 2, and a level 3. Now, D to E, this is a little different. I'm not teaching you guys Elliott right now, but I'm just going to give you this. D to E, there's going to be 3 levels, but it's going to be really short. 1, 2, 3, because E never reaches the trend line. These are the trend lines. These black lines right here are my trend lines. So, okay, so let's go back a little bit. So remember, every trend, either up or down, you gotta make sure that you guys find the trend first. You gotta look at the trend. Not every chart you're gonna be able to see it. So whatever chart you're able to see, that's what you attack. If you find a chart that you can see the trends, then that's what you attack. Like on this one, this is a level 3. So we wait for level 1, level 2, level 3. Here, level 1, consolidation, level 2, consolidation, retracement, level 3. And then it went level 1, level 2, level 3. So it's difficult to see right now, but believe me, the more that you guys do the markups, the more that you guys do the homeworks, it'll be easier to see. This is the same chart again. Level 3, level 1 to the top of this wick, consolidates. Level 2 with the long wick, consolidates a little bit, and then level 3 straight up. Same thing coming down, level 1 to the bottom of the wick, consolidates to the right. Level 2 to the bottom of the wick, consolidates to the right, and level 3. And this is how we make trend lines. We'll make a trend line from here. It'll hit this point and it'll come down. Trend line will be here. It'll hit this point and come down. So then we got A, B, C, D, E. You get it? That's the Elliott wave. 0, A, B, C, D, E. So, okay, so that's that. And then again, this is the same thing. Look, 0, A, B, C, D, E. 0, A, B, C, D, E. Elliott wave. It's a 5 bounce, always 5 bounces. It's the same thing all the time. It's never going to change, you guys. This is just what it is. It's an algorithm inside of an algorithm inside of an algorithm. You just got to find it. But this is what we teach. Okay? Level 3, trading level 3s. This is what we do. Right now, since you guys are beginners, this is the only bounces that I want you guys to take. It's going to be the A, B, C, D, E's. Those are the only bounces that you guys should take. Those are straight, easy, low-risk bounces, and they pay out the most. Now, when you find something like this, when we start getting into the trend line structure next week, you guys will start getting into trades next week. This is what you guys are looking for. You guys are looking for these level 3s. Once you find these level 3s and you get the confirmation of a level 3, then you sell. You know, from here to here is 500 pips. That's the ones that we're working on. I'm jumping that a couple days ago when I hit my pending. And then from here to here is probably another 500 pips. That's 1,000 pips on 2 trades. I want one trade, really, 1 pair. And then from here to here, about 250. You're talking about 1,250 pips. We haven't even moved charts. This is what we look for, level 3s. Once we get here, the rule is that the E level 3 will start a new trend. If we can get to here and see this, that means we got from here all the way over here on the new trend making money off 1 pair. That means you can be in this trade for months and months and months and months, just making money. Your pipeline will be ridiculous. And that's the goal. But this is what we look for, level 3s. Level 1, level 2, level 3, that helps you identify the trend line structure. And then level 3 is the reversal, and that's what I want you guys to trade. Okay? So what I'm going to do is I'm going to stop this right now, and we're going to start doing lab, and we're going to start doing your trading view, so you guys can start putting your signals in, and we can start doing your charts now. Give me 1 second. Let me close this out.